Everybody.
What's going on,
As
Eric?
per, what's up, man? As per usual, right as I'm trying to launch this thing, never had an issue before, and then it says I don't have permissions. So I feel like that's just part and parcel for the GameStop saga. That there's always something going on. But I'm stoked to do this with you, man. Thanks for spending the time to chat with us.
Yeah, thanks for having me on. I know it's a big deal to have a guest on your show. You never know what what the person could say. So I appreciate you having me here and trusting me, especially with I know that you're new to the GameStop saga relatively, and
Very.
but you're really into options, and that's what your crowd's all about. So there's a natural kind of synergy going on here. So I'm as much here to learn from you as maybe you are from me. So excited to be here.
Yeah, man. And well, it's funny because I think you give the platform a little too much credit. I'm pretty ratchet. So we can talk about whatever. I don't care. So I figured to kick us off though, we could start really quick with a little bit of background on the way that you approach the GME space, specifically what got you into it and how you look at it now. And the whole point for everybody is just so that you understand our perspectives. We're two people talking about a thing. What we talk about are ideas, opinions. None of this clearly is financial advice. None of us are financial advisors. We are all just dudes looking at information, trying to figure out what's going on. And I think one of the coolest parts about both of our backgrounds is they're very different, but there's something that's very clearly joined us, which is the anomaly that is GameStop. So I'd love to start with that, a little bit about what got you into GameStop and how you look at it now.
I think that's a great intro. I kind of approach it from two angles. The first one is it's a puzzle. As you said, there's like an anomaly here that doesn't make sense. So that's my number one, is trying to figure this thing out, obviously, to then make financial decisions for myself, right? But I think you said it really well. None of this is meant to be financial advice for anyone. The volatility on GameStop, we've seen just in the last 2 months, GameStop's been as low as $10 and as high as $80. That's crazy for a stock. And then it's bounced around to basically every price point in between there. So most people don't know what that feels like unless you've got shares or options or something riding on it. And then all of a sudden you're like, oh, wow, this is a lot different when you've actually got money in the game. So the first angle is, figuring out the puzzle and trying to use it to my own advantage, I would say. And then the second one is just telling the story, because I feel like so often I hear things in the media or elsewhere. I'm like, that's just simply not true. So I want to tell the story from my own kind of watching of it and see what's going on. And sort of that way, when people go back in time, like we've all done with, I think, Keith Hill's live streams and various memes and everything else, he told the story for a long, long time, and he was the only guy telling it. So, I like to just think that in some way I'm following along with the story and telling it in my own way. But I do want to also say that I don't think I at all represent the community. The GameStop community is huge. At least 200,000 registered owners, probably 1 million plus people involved in this community. Some people are diehards. They don't want to ever sell a share until it goes to the moon. Other people trade options. There's such a big community, and I don't try to speak for anybody, just speak for myself.
Yeah. I think it makes a lot of sense. And I think the way that you highlight the background of this story, it paints a pretty big picture, at least in the way that you think about the world that we're in and kind of the product that we're out. So yeah, I appreciate that very much. For everybody else here, I'm probably the most boring component of this whole thing. So we'll spend very brief angle on what I'm looking at this from. I'm a lifelong trader. I started when I was in high school back in 2007, and I've traded options my entire life. I'm 33 now. They've been a huge part of my life. However, I'm specifically looking for market opportunities as they occur, where they occur. And that's what led me to GameStop during the original activity we saw back in the early 2020s. I think, what was it, 21?
Yep, right here, January of 2021.
Yep. And the way that I kind of came across this, my side, was more so anomalous market activity. I have a bunch of scans and screeners that I run all day, every day. And when I find things that pique my interest, I speculate. And that's really what I look to do, is capitalize on markets that are moving and offer opportunities, sometimes asymmetric risk profiles, stuff like that. So as I'm covering and talking about my angle on GameStop, I think it's really important to mention, like, I very much view myself as a guest in this community. Like, I do not have the background you guys do. I do not have an even tenth of the understanding of all the lore. I have people teaching me what these different memes mean. Like, I'm learning a ton, but there's a lot. So really the stuff I'm looking at is just from a kind of practical application of my trading skill set, which is centered in derivatives. That's what led to me into GameStop again during this most recent event. And I try to reiterate to people, I am not attempting to spread FUD. I'm also not attempting to spread hype. I am a trader. I'm looking to find information that I can trade upon. So when I look at GameStop, there's kind of two very different sides of my brain that occur. The first part is from the technical perspective of trading. And then the second part is from, this is the craziest story I've seen in a long time. And there's a genuine interest in the story. So it's a weird confluence of events for me, because typically I'm very agnostic to product. I don't care what it is. I just want to know if there's an opportunity in there for me. And this has crossed those lines a little bit. So that's the primary angle that I'm looking at here, just so that everybody understands where we're at. So I thought a good starting point would be if you could walk us through a little bit of the case for GameStop today, as it sits today.
Did you want me to tell really quickly my backstory on how I got involved too?
Yeah, please.
Sorry, because I kind of skipped that. So during late 2020, I regret not buying, but I was just kind of along for the memes. I was aware of Wall Street Bets at the time on Reddit. I thought the memes were hilarious back then. So I was following along, kind of keeping up with it, but I didn't understand what a short squeeze really was. I'll be honest. I didn't look into any of that. I went on what I call like an internet detox. So throughout December, I was off the internet. I try to go like only answer my emails at work. Otherwise, I don't allow any internet for a month. So when I came back, it was actually only because a friend had texted me Elon's tweet saying GameStonk. Went on to Wall Street Bets. I was like, oh my goodness, the story's still going. And then I like saw what a short squeeze was all about. I'm like, oh, this thing's going to go to the moon. So I'll buy some shares. So I bought some shares here on the 27th or 28th. I think it was the night of the 27th. So stock opens up, runs up to 483. I drive to work. By the time I get back from or get out of my car at work, stock's been dropped off a cliff. I'm like, oh, wow, what's happening here? And then I decided, well, back on my internet hiatus here. So I went radio silence, kind of like licking my wounds, feeling really bad about myself until my brother texted me. It was on February 24th and the stock ran up. I'll never forget. It was like $196 in the after hours. I was like, okay, something's going on here, right? And then it ran up to like $350 later in March. And I was just hooked ever since because I couldn't explain how they dropped the price so low. But then what the reckoning was, like what was going on here in March and late February. And then the cycle in June. I'll never forget this either. I was teaching summer school, trying to make back money that I had lost on GameStop. And that was like how I made it up to my family. I said, I'm going to work extra to make this all back. So I just started pouring my heart into working extra. And then there's all these cycles ever since. And so I just started to investigate these cycles. And that's kind of how I got involved with the whole thing.
I think your story seems like one of the many I've heard of people getting involved in GameStop, and it's representative of a lot of people I've come across, but it has a lot of unique qualities to it, which is really fun to hear about. That's one of the coolest things I find about trading, right? Like your background, you're a teacher, right? And then obviously you've progressed through your career there. I have a completely different background. Like the world of trading is fun from the jump because it is a band of freaking misfits that find our way into markets. And then you look in like the microcosm that is GameStop and it gets even more interesting. So now when you think about GameStop for you and the juxtaposition between making money as a trader and just the stuff that's interesting about games. How have those two coalesced for you over your relationship, I could say, with GameStop?
That's a really good question. So, historically, I grew up in the 80s and 90s and 2000s. So I remember GameStop as electronic boutique. When this whole thing fired off, I would say on Wall Street bets, I didn't probably buy in because I'm a really risk adverse person. So for me, it was like this company looks shaky to me. So I got the bear thesis right here. And I was pretty much sold on this bear thesis. I'll be honest. We had a company at the time, this was 4 years ago, that was losing revenue to downloadable games. And, I use Steam, I use Epic. So I could see the problem here. I hadn't gone into an electronic boutique or a GameStop in over 10 years. Why would this company be doing well? Revenue per store is falling. They were closing stores. They had a lot of bad debt. Their leadership didn't seem to be doing anything about this problem. And there was no reason to choose GameStop over something like Amazon, Valve, Best Buy. There's no stickiness in this space. So they needed a way to transform what they were doing. That seems pretty obvious. Ryan Cohen took over the company. I missed that because I was on my hiatus. But in his letter to the board, which I would later read, he says all the same things. That the company needs to transform itself, still does. They needed to stop bleeding money quarter over quarter. So that would have been that's the bear thesis in a nutshell right there, right? So where do I see GameStop now? Well, they were able to, through the sneeze, as we like to call it, in January of 2021, issue shares out and raise over $2 billion. So their debt problem is gone. They've got all this cash now to work with. They were able to trim costs substantially so that now they're yearly profitable. This took 3 years to do, right? So the story from a balance sheet perspective, and I was never one to read balance sheets. In fact, I was thinking about it today. I was like, when did I start reading 10Qs or 10Ks, right? And here I am poring over them to get every detail I can from them. And the company, from a balance sheet perspective, totally different now, right? So the bear thesis, dollar for dollar, makes no sense now. There still are these problems, though. Their revenue per store is falling. They don't have a reason for people to be sticky customers right now. But they're starting to do things like what they've done now. It's very small. It's the beginnings. But like with the tradable collectible cards, like I've just picked up a new EV, by the way. I was hesitating on if I should show it on the channel. But, they're selling PSA graded. What's up?
Why should you not show it?
Oh, here we go. I was like, do people want to see an EV on the channel? But here we go. Right.
That's
so
actually,
they're selling.
That's my wife's favorite Pokemon. I got to say Pokemon. I normally say Pokemon joking around with people, but I've realized that would have been a big misstep here. So anyways, back to Eevee.
So yeah, it's our favorite Pokemon also. So they're selling these PSA graded Pokemon cards. Right. They're selling now these CandyCon controllers. So we're starting to see like the transformation happen and the companies start to branch out in ways it's never done. So I'm excited about that. And then there's also the whole aspect of, Ryan Cohen's on the board. He doesn't take any salary. He doesn't take any compensation at all. He just buys shares every year. You've got 18% of the company directly registered. That's never happened before, as far as I know. You've got this legacy short interest that's got to be huge, honestly. And then we've got Roaring Kitty, right? So we've got the best trader I think we've ever seen. I think you can probably agree, best options trader we've ever come across, and now owns, as far as we know, 9 million shares of GameStop. I'm waiting for another yellow update. Right. So the bull thesis is looking pretty good to me. The company's just got to take this legacy portion of its business, right? Retail gaming, not the most glamorous thing in the universe, in collectibles, and leverage that with the $4 billion in cash it's got and its unique fan base to do something to make money. So that's basically where the story is now. Is the company at any risk of going bankrupt? I would say zero, right? So zero risk of bankruptcy, lots of cash on hand. What can they do? And I think that's what Roaring Kitty spoke to in his live stream just last month, which was stage one is done, right? Curb the bleeding, get the legacy business under control. Now we've got to see stage two, which is the transformation. And that's what I'm waiting for. I'm waiting to see that. We're just seeing like kind of the beginning parts right now, just experimentation. But I think everyone's looking for a merger or an acquisition. What could they buy that's going to make the company money? That's number one. It needs to be small enough to not be a big risk. I don't want to see them burn a ton of cash and lose a ton of value, but big enough to actually impact the bottom line of the company.
Right. I see. And the pivot's really interesting. I want to linger on that for a moment. But first, I just want to shout out to everybody in the chat. There's over 600 people here to see you, Mr. Richard. So thank you for, again, taking the time to at least teach me and obviously share with everybody else. It's super awesome. But let's talk a little bit more about that pivot. There are a lot of companies, Blockbuster, Kodak, right, that are examples of companies that were kind of premier leaders in a field, failed to make a pivot, and then they had a big problem, went out of business. So when you look at GameStop and you think about the pivot potential and what kind of pivot would make sense, two questions. First one, timeline. What timeline makes sense for this? Two, what does it make sense to pivot into?
Well, I hate to just always quote Warren Kitty, but he said it really well. It's been 3 years, right? If this takes more than 3 years, that's okay. But if it takes more than 5 years, that's not okay, right? So the timeline is they need to start doing something here pretty soon. I think people's patience is not endless. We've got a lot of patience, but not endless. I thought the NFT marketplace was a great idea. I know people that followed my channel when it was very small. I was putting out NFTs every week. I don't know if you know that. So I was doing my own drawings, publishing NFTs using Loopring, and then giving those away to people. I thought NFTs made a ton of sense for two reasons. Number one, it was a way to take digital assets like in video games and make them collectible and then transferable between gaming ecosystems so people could retain their value outside of, say, servers being shut down. So like, let's say you earned an item in Diablo Immortals, right? And then that server shuts down and someone makes a private server where all those assets are still real, right? And you can still use them. Then NFTs for items or NFTs for games are right up GameStop's alley because it's all about buying and reselling games. At the heart of it, that's been GameStop's kind of like MO or like identity for 20 years. So if GameStop became like the place to go for buying and reselling games that were in NFT form or in-game assets that were in NFT or form, that would have been like the perfect way to take GameStop's existing like legacy identity and make it modern, right? And capitalize on what was happening with NFTs. But NFTs went into like a bad period of time, it became very speculative. The kind of market would jump from one chain to another. And it became honestly just like a rip-off con artist hub, which looked really bad. And the SEC came down with a lot of scrutiny on NFTs and crypto in general. And I think that the company kind of like took that whole idea, the NFT marketplace and everything associated with it, and just put it on hold. They were like, it's not the right time. We could get ourselves in a lot of trouble going down this rabbit hole. And so they went to things that, are very similar. Like this is very similar to me, right? This is something we all know and understand. It is on a blockchain because it's, got a QR code and everything associated with it, but someone else holds the key to that, PSA does. And it kind of prevents them from going into the whole crypto sphere, but gets them into the collectible space. So I think that's a good way to go, but it's small potatoes right now, to be honest. Like, honestly, PSA graded Pokemon cards is like, I think like a multi-billion-dollar industry right now. I know that in general, collectible cards are like an $11 billion industry. How much can GameStop pull in of that is yet to be seen. But right now, if you look at the volume of cards on the website, pretty small. Not going to change the fundamentals of the company yet or something like this. So where do I see them going? But honestly, I've said on my channel, they probably want to go in a direction that no one would expect to give them some kind of, I don't know, survivability. Sorry to talk so long on this. It's a good question. Survivability in the long term. And like, so with the amount of money they have, $4 billion, they could just become a holding company, right? They could have another company under their umbrella that has nothing to do with gaming, nothing to do with collectibles, that just makes money. I would be happy with that too. IEP and Berkshire Hathaway are great examples, very diverse holding companies. So could GameStop do something like that? They've basically done that in the past when they picked up all the mobile division companies. So they could do it again. And they built a lot of value there and then sold it off for cash. So I don't know. I'm not beholden to any idea. I know people are very focused on esports. I think that's very speculative right now. I think it's risky to go into something speculative. I'd like to see them honestly just wait because I think that macro conditions are ripe for a downturn and they could buy something for cheap. I don't know what it would be though. I don't know what Ryan Cohen has in mind. I've said on my channel before, Ryan Cohen got into the dog food business. You know, it could be something very unglamorous, like dog food or something. And we'd have to like take his guidance on it or take his kind of direction on it. I know Larry Chang is on the board and he's invested in companies through his venture capital fund, like US Mobile, right? So very unglamorous. We were talking about like budget level phone company, cellular company. But if it makes money, it makes money. That's what I'm most interested in.
The good old, if it makes dollars, it makes sense.
There you go.
When I think about the building of capital, I find that entire world pretty interesting because they're sitting on a lot of cash. And one of the interesting things right now about the cash pile is even at a moderate rate with rates where they're at, it puts them at a pretty healthy spot. So when you think about the timeline that they would be looking for an acquisition, is there anything that you've picked up from your research that, other than potentially waiting for a bargain of some sort, something that comes across that looks really good, do you think that there's some sort of imperative that they're fighting against in terms of a timeline to make something happen with that cash?
Well, I would say I'm super excited for September, obviously, because we're going to see the time that cash is on the balance sheet. So we're going to have a whole new look at this company right here in September, probably around the 5th, where we'll see now, like you said, about a 5% rate of earn on that cash. That's great. There's going to be paid in on the equity, right? So it's not just free cash. People paid into it and it's accounted for on the balance sheet. But what I'm looking at is a few things. I'm going to speculate a bit here, which I hate to do too much, but there was a merger and acquisition position. No. What's that?
The tinfoil hat, dog. I literally was gonna make a tinfoil hat. Like, put that motherfucker on and speculate until your heart's content.
All right. So everyone in the chat's going to know way more than me on this, but I know that GameStop hired a merger acquisition guy relatively recently in the last couple of months. Big signal. Larry Chang's been talking about like various things to do with mergers or acquisitions or putting capital to use. Specifically, I want to say what he telegraphed was you wouldn't dilute unless you had a reason to dilute, right? And also that dilutions can be seen as bad, but if they increase the long-term health of the company, they can be good. And if the time is right, then you got to go for it. We also know that the lawsuit that Ryan Cohen was brought into from the 2022 events was dropped or dismissed back here on June 11th. That's a big deal. So I don't know if that lawsuit was holding up a merger and acquisition or holding up the company from doing anything, but it's important that, you know, they're lawsuit free and the head of the company is lawsuit free going into anything that they could do. The other thing I would mention is, you know, the last time Ryan Cohen bought in was, I believe, right before the shareholders meeting last year in 2023 would have been right here. He had bought $10 million worth of GameStop in 2022 and then $10 million worth of GameStop in 2023. He hasn't bought any GameStop since. And I think it's a hard ask for him to ask his shareholders, hey, I'm going to dilute us 39%, which they just did, but then I'm not going to put my own money where my mouth is. I think he's probably chomping at the bit to buy shares of the company. Something's stopping him from buying shares. He became CEO shortly after that, 3 months after that. So he's been CEO now for almost a year. So I imagine that the CEO is going to be in the know on any kind of merger or acquisition that's going on with the company. Larry Chang and others might not be, so maybe that's why they were still able to buy. I don't think I have it on the chart still, but somewhere back here, I know Larry Chang bought in about $10 or $11. Need to add it to the chart, but Ryan Cohen hasn't, and I know he probably very much wants to. So something's stopping him. He's probably on a lockout, and I would just say that's basically my gut feeling on merger or acquisition news is that we're waiting for it to be cleared through the powers that be, right? So when could it happen? And that's the great unknown for me. And what makes this is the thing I lose sleep the most over is when this announcement happens, what's it going to do? Because I know when we talked, you had said, generally speaking, when a company purchases another company, the stock price goes down of the acquirer, right? So
Yep.
the buyer. So could it have a negative impact on GameStop if GameStop goes and purchases some other company? Who would they be? How much are they going to contribute? How much is it going to cost us? How much are they going to contribute to the bottom line of the company? Those are all things I'm interested in. And then what's it going to do to the share price, right? And when's it going to happen? So, and it could happen like we've seen with any of this stuff out of nowhere. Like literally, it could happen. I don't know. Could it happen on a Saturday? Could it happen right now? Probably. So, like, I just always wonder about that. And then correspondingly, when is Ryan Cohen going to buy back in, right? So this is a guy that's an independent billionaire. His stake in the company is now down to 8.6% from 13%. You know, like I said, it doesn't send his shareholders a good message when you dilute them 39% and yourself. So he probably wants to buy shares. He's got plenty of money with which to do so. How much is he going to buy and when's he going to buy? So those are my two most interesting things to look forward to. And there's no timeline on them. They can happen at any time. So I'm just, waiting on those ones.
I see. So a couple follow-ups to that then, and we have about 45 minutes. I have a hard stop. So just giving everybody a heads up, I actually want to make sure that we get to integrate as many questions as we can and whatnot. I don't want to linger on any one point too long. And if people want, Rich and I, we were talking about it already and potentially doing another one or some sort of cadence if people are interested, but that's a future us problem. Focusing on right now, when you look at the share offering, obviously there's a ton of conversation about the dilution and a lot of mixed feelings. A lot of people felt that they were kind of done dirty, that crushed any potential of a sneeze, which I now know what that is, because of you. Thank you. And I think people are really wondering how that factors into things, especially as we get a little closer to transitioning into more understanding about your cycle theories. Well, I guess it's kind of a joint cycle. A lot of people don't know about that. But let's start with the share offering. What do you make of it? Do you think that negatively impacted the potential for a sneeze? If so, how? And how does it feed into the FTD theory?
Okay, so that's a big question. I think the first thing I would say is that neither of these two events were going to cause MOAS. I need to start there right away. So MOAS would be the mother of all short squeezes, right? We can see that the stock price on right here, May 14th in the pre-market hit $80 that morning. That was on a Tuesday morning, but it was on its way back down and they didn't offer shares until Friday the 17th. So the stock price was already running down, right? And then Roaring Kitty came in and started supporting the offering by buying huge numbers of calls, right? So two things to consider there. Number one, they didn't stop any kind of an event. It had already happened. We don't know what it was necessarily, but it seems to be like a gamma squeeze of some sort. And then the stock was like pretty obviously back under their control. So I would have personally liked them to have issued shares sooner, like maybe Tuesday morning, Wednesday morning, but instead they kind of let that whole cycle play out. And then they really offered into the tail end of it 5 days after big volume appeared. That's when they first start selling shares. And it was 50 million shares or 45 million shares. That's a lot. It's a pretty significant dilution. And they were able to raise $933 million, which I would say is important because I wrote in the letters to the board, which I've got open right here. I really didn't want to see them use their cash pile for a merger and acquisition because you need, especially in this environment, high interest rate environment where the cost to borrow is so high for corporations, you need cash to operate healthily for a company that's trying to get their balance sheet under control. So if they are trying to do a merger acquisition or something like that, I wanted them to have cash on hand to do it, not use their existing cash pile. So I'm positive on the whole event right here because they didn't, disrupt a cycle. They waited for the cycle to kind of end. They're kind of telegraphing to the community, hey, these cycles are happening, right? If we can raise money into them, like instead of at $10 at a low, like some companies do, dilute at a low, let's dilute at a relative recent high. And they even said in the prospectus, there's events here that are not corresponding with corporate action. So we're going to seize the opportunity and sell shares into it. So I'm sort of okay with this, especially because fails to deliver are still appearing post cycle. So you can see XRT still has fails to deliver after the cycle. GameStop still has large fails to deliver after the cycle. We did see 20 million shorts apparently exit their position during this. So reported short interest goes down, which, if you're looking for a mother of all short squeezes, that's a concern. But I don't think if you're looking for a mother of all short squeezes, you're worried about 65 million shorts going down to 44 million shorts, because you're pretty much convinced at this point that there's way more shorts out there than are being reported. So this is probably, to me, a drop in the bucket for the overall short interest. So then we get to the second dilution. I like their timing way better on this one. I'm going to make a lot of people really angry by saying this, though. So let me walk through the second dilution. So we had an event happen on June 6th. Stock ran up to $67 in the after hours, and then they immediately offer in the pre-market into it. And they sell even more shares this time, 75 million shares at a much better price, $28 a share, raising 2.2 billion or so. So much closer to the peak, like basically almost right into the peak. I like this timing. This is basically what they did on June 8th, 3 years ago. So I'm going to go back in time a little bit right here. So June 8th is right here. So they had a shareholders meeting. Stock is running up to $350. They offer right into the top of it, netting themselves incredible money right here, putting in place all the cash we had on hand to do basically stage one, cleaning up the company, getting it healthy again, and having money on the balance sheet. So they would not have posted a profit this past year had they not done this. So this was basically a year or 3 years ago to the day. So I like this. I also recommended it to the board in the letter. So I had specifically said, have shares on hand with which to offer into one of these cyclical events. Because again, I don't think this was MOAS popping off or any kind of squeeze. I think it's just a fail to deliver cycle. So we can kind of maybe pivot into that at this point. The other reason I'm not super concerned about it is because, they did this as Roaring Kitty was live streaming. And this guy at the time was worth what, $900 million on his position. He didn't seem too concerned to me in that live stream, I'll be honest, or surprised at all. And if you go back and look at his previous videos where they had offered an S3 in December of 2020, he was actually encouraging them to use the S3, raise money, because he thought it could be really helpful for their transformation. And in this live stream, he basically says, look, you're either thinking that Ryan Cohen is a doofus, or you think that there's something going on here. And what does he do? Sells his calls a couple of days later and buys a whole bunch of shares. So now this guy is riding a sandworm, like in his meme, and he's got 9 million shares of GameStop. As far as we know, hopefully he's still got them. I don't doubt he does. That to me is just a huge signal of strength that a company can issue 50 million shares or 45 million shares, issue another 75 million shares, and the stock price has only gone up, in that time period. That's great. So all this is great to me. Company has even more cash on hand. They diluted 39%. I don't know. I'm very optimistic about this. And their biggest non-board member shareholder, what did he do during the whole time? Went from 800,000 shares that we knew about up to 9 million shares. So I don't know. It's all bullish to me. But I'm curious what you think.
Well, it's funny, the highlight of my perspective, you literally just said it. So I'll reiterate it though. The fact that, especially in this most recent offering, when I saw that was coming out, I was getting ready to closely monitor the price. And it's because I expected much more of a reaction than it was. So the fact that when they made that offering, it was literally eaten up and the market really didn't care, to me, that's supremely telling. And the other thing that I can't help but find so interesting is, what is the intrinsic value right now for GameStop? Is like $13 a share, something like that.
I've got it right here. I think it's 1027.
Okay, got it. And when I think about where that is juxtaposed to where price currently is, I can only imagine that the people that really are trying to short GameStop would love nothing more than to press it down here. And the fact that it's not happening, I can't help but find that fascinating, especially when we look at the volume in GameStop over the last few weeks. It's been very, very light on a relative basis, but GameStop has remained exceedingly range bound. It's hanging out. It's hitting lows of like 22, 23, and then the peak starting from the 18th of June. The peak from there has been like 27, maybe. So it's been very range bound and light volume, and it's not getting pressed down. That's very interesting. So when I hear people talking about the impact of the share offering, it has an impact. There's no debate about that. That's an objective truth. But I don't know that the impact is as detrimental as people think. Now, let's dovetail that, though, into the FTD conversation, because I do think that does have an impact there, because a lot of people, I think, sometimes misunderstand a market maker's perspective. And I'm not a market maker. I'm actually really close friends with one, though. I asked him about this exact scenario, and he did used to work at Susquehanna. He runs his own little firm now, and he's been trading, I literally think, for 55 years, and he's still market making. So the dude's been at this for a while. And I was asking him how he would have treated specifically a position like Roaring Kitties, and it was fascinating because for a tenured market maker like that, his perspective is, as you have an option coming closer to expiration that's deeper in the money, you hedge it, and you would be hedged leading into that event. We know GameStop and the market making firms for GameStop, it also, shocker, is a bit of an anomaly. And they do have a little bit of a history of under hedging in an attempt to make a little bit more money. I would have to view, though, the recent jump in price against the kind of landscape for GameStop with this share offer would probably be well received by people that might be underhedged, looking to gain exposure. The tricky part for them, though, is they weren't really getting in at a great price because price did not plummet. But how does that impact your cycle kind of theory?
Yeah, so I would say that, if this is a big if, right? If market makers are juggling, fails to deliver, and they're juggling ETF exposure, fails to delivers on ETFs,
Sorry,
then
just a quick offshoot there, because I think a lot of people actually don't fully understand the juggling thing. And the last time you were kind enough to like draw it out.
Yeah.
I don't know
let's draw it out.
Yeah, I think that would be super useful.
So basically, here's kind of my theory in a nutshell. So stock price is currently at like $24, right? And what's going to happen is you're going to see a kind of ebb and flow towards max pain, because as we know, the market makers are going to want to end this thing near max pain so that calls don't get put in the money, puts don't get put in the money, and they can just scalp all the premiums week over week, right? So you're going to see it trade into these max pain windows, something like this. But true buy pressure, any retail buy orders are not going to affect price positively. Even something like Roaring Kitties purchase back here of 4 million shares, right? So all these purchases, where are they going to go, right? They're either going to fail GameStop. So let's put our GameStop fails up here. So this is a beautiful drawing, by the way. So here's our GameStop.
Literally thinking if you're doing NFTs, these should be the freaking NFTs, dude.
Right. So they have two places to juggle. They can take these buy orders and they can fail GameStop, right? Which we see in this column right back here. And I'd say what's really cool is post offering, they were immediately failing GameStop to a high degree again, which is great to see, right? That was something I was very concerned about. Are these going to suddenly vanish because their juggling got cleaned up with the offering? I don't think so, right? Where else do they juggle this? Well, I think when they need more time, they can then pivot these fails to deliver into ETFs, right? So down here, we've got all these different ETFs. I think there's something like 105 different ETFs that hold GameStop, right? So what they can do is they can go to a market maker and they can say, hey, make us a unit of XRT which is like 40,000 shares of XRT. And why would they do that, right? Well, upon the creation of this unit of XRT, or this batch of XRT, they're just not going to put any GameStop in it. They'll put everything else in it, Chewy and all the other companies that are in it, but they'll pivot some of these fails to deliver from over here to over here. It's a juggling act. So what would be the signal that they're moving FTDs from one hand to another? You would see volume here. You would see the creation of ETFs, and we see that repeatedly in this column here. So we can see big creation happening on the ETF here, and we've been in a drought ever since. So that's also encouraging to me because it's showing that they're not moving a position around with XRT. Why would that be encouraging to me? I think XRT is already, I think XRT is already full. And someone asked a really good question today on my channel. They said, what do you mean when I say that XRT is full? I mean, it's all failed up. So XRT, we know has, let me pull it up here, 230,000 shares of GameStop that's represented in its outstanding. So the most they can fail is 230K shares of GameStop. But that would be for the 5 million shares of XRT that exist. The thing is about ETFs is you can short them to create additional like phantom units, right? And XRT specifically is shorted 400 and something %. So that basically means you have to take this whole thing and multiply it by 4 or 5. So you're going to have something like 20 million shares or 25 million shares of XRT. So basically they can fail XRT to about 1 million shares of GME. And then it's done. They cannot fail XRT any longer. It's full up. And what is it full of? It's full of cash because they're cash settling this ETF in hopes of someday down the road turning all that cash back into GameStop. But they don't want to do that yet. When are they going to have to do that? And so the signal to me is that post share offering, you can see right here, they were doing a lot of creation of XRT, but then they failed XRT a whole bunch right during this event, right during the offering. They're failing XRT like crazy still. So for some reason, they were using, like you said, all these new shares, these 75 million shares to do what? I think they were hedging options because it's expensive to hedge options. You have to go to the lend pool. They don't want to pay the borrow rate. So they said, hey, we got a good idea. This roaring kitty guy is holding 120,000 or 12 million shares worth of options here. And we had big expiries here, lots of options that were going to be in the money. So let's just hedge a bunch with these things, right? These brand new shares, and let's not fix RT right away. So when are they going to fix XRT is basically the question. When are they going to, instead of having an ETF full of cash instead of shares of GameStop, well, they could pass it back over and fail GameStop a whole bunch. We've seen that happen in the past. Or they could go to the market and buy GameStop. But if they do that, what's going to happen to the price? It's going to go up really, really high, right? So this is where we see events like 6.6. I believe 6.6 was them settling ETFs, especially XRT, getting shares back in there to basically clean it up so it can be their liquidity engine again and they can use it to drive price down. So June would have been one of those events. And then when would the next one be, right? Is the big question I think everyone would want to know. When is the next time they need to fix XRT?
Got it. Now, this leads to two follow-on questions. The first one that I saw that was really good is, why do you think there was such a lull in these cycle activities that have now since popped back up? Start there.
Right. Great question. So I think there's basically the following ways to short the stock, right? They can go to the lend pool. So how do you short a stock? I'm going to actually type for once. I know it makes people mad too.
Yeah, it's boring. I actually thought that we were going to get a bit more creative drawing, but okay, fine.
All right. So way number one, you could short the stock is you could just go to the lend pool. They never want to go to the lend pool, right? It's reportable. They're paying, a short percent every single day. They don't want to do that. So they could buy puts, right? When they buy a put, a market maker is going to come in and hedge it. What's the market maker going to do to hedge the put? Short sell the stock, right? Probably naked. So they could drive the stock down that way. And it inflates the outstanding because the market maker is naked shorting to hedge their position. Or they could fail to deliver an ETF, right? Which is what I just described right here. This basically gives them not infinite liquidity, but near infinite.
just
like we saw. Go ahead.
just a quick note on the hedging puts. The way
Yeah.
that you're talking about hedging that is what we would call like a bit of a pure hedge. There's a lot of other ways that they can hedge that position out. And I think it's important just to flag that. Again, it doesn't impact this too much. I just see a lot of people apply the very strict approach of hedging with pure hedges. And the reason why I bring that up is because it oversimplifies a little bit about the way that market makers are going to manage their book. And it's never predicated on one single position. It's always predicated on the entire book of positions across all products.
Right.
So just a worthwhile note, nothing incorrect at all, but just something other people should be aware of.
Perfect. And then I'll say the last one, the one we know the least about is rate swaps. So what is a swap? You know, a swap is a derivative contract between a party and a counterparty. If it's an equity total return swap and it's to the downside, you're betting that the stock is going to go down, right? So you could get huge exposure to GameStop to the downside. What's the counterparty going to do? They're going to hedge that position. They're going to, you know, go short with you because they don't want to make the difference on the trade. They want to make the premiums on the trade. So they want to make the interest that you're paying them. So to enter a swap, you're going to have to find a counterparty willing to bet with you that GameStop's going to go down, that is just interested in scalping your premium along the way and can naked short it for you along the way. So what do I think happened to basically stop these cycles from happening? Because we didn't see a cycle like this. I'll go to the chart here for a second in a long time. So let me go to the cycles here.
While you're doing that, a quick note for GC. They're just asking what a swap is.
Okay.
The way to think about a swap is it's kind of like a derivative that's created between two parties, and it's a non-standard derivative. There's different rules and underlyings that can be part of a swap. So just for you to be aware of, just think of it as a contract between two people with specific terms.
Perfect. So here's GameStop's graph. And what I'm going to show is these peaks that we were seeing back in 2021. Most of these high points back here were probably ETF related cycles happening, but we haven't seen very many of them since. We saw one back here. We saw one here. And then this was the last one we really saw. This was in June of 2023. It was like a small one, if it was even a cycle. And then we saw nothing since. And I think the reason why we didn't see anything since is because we know that a lot of swaps containing GameStop were entered back here in August of 2022. The only cycles after these swaps were entered was the one I mentioned on Halloween of 2022, potentially like a small one in February of 2023, and a small cycle that happened in June of 2023, right after Ryan Cohen bought in. Price ran up a bit. We had some fails that look pretty distinctive. So how are they controlling this? I think they were controlling this with long duration swaps. And we know that all the swaps, all their expiry for all those different swaps that were in it was at the end of May of this year. So the timing is just too perfect. So we know that there's just a couple ways you can short. We've got the one with the most visibility. Puts also have pretty good visibility. ETFs don't have a lot of visibility, but the cycles seem pretty distinctive. And swaps are long duration and huge, talking about tens of millions of shares. But we do know that they were expiring at the end of May and beginning of June. And that's when everything started happening again on GameStop. So to me, it's a question of where did all the cycles go? They were able to just say, okay, our ETFs are full. We don't want this thing to blow up again, have these cycles appear again. So we're willing to pay a counterparty a lot of premium. It's going to cause us to bleed out over months and months and months, just like in the Big Short, as you're paying out those premiums. And then they had to re-enter, but upon re-entering those swaps, either they didn't re-enter or the exposure, the naked exposure, caused the cycles to flare up again, because they need to have the short position, the juggling needs to be somewhere. It's either going to be in FTDs on GameStop, which they don't want to see. It's going to be on fails to deliver on ETFs, or ETFs go on reg show, which they don't want to see. Or they got to keep paying premiums on swaps, which they don't want to do. But once this expires, you're going to see everything else flare up again.
Yeah, I'm following. I think that makes it a pretty sound case. Now, when you think about what kicks off the activity, right? You've kind of outlined that pretty clearly here. What kills the activity? What forces us to kind of go into these really quiet, dormant? And
It's
also
it's the swaps,
shout out. It's the swaps. Got it.
right?
And
You can, or I'll actually mention one other thing I wanted to make sure I mentioned. They
yeah,
basically need to find sellers, right? So a swap to me just represents a big bunch of sellers. When they entered them right back here in August of 2022, the stock got crushed down because their counterparty is going to sell. They're going to sell shares in this case that they don't own, right? They're naked short on the to hedge the swap, right? So the stock goes down because of all the selling pressure. When they re-entered swaps somewhere around in here, what happens? Stock goes down even more, right? So entering swaps is one way to cause suppression of cycles, suppression of price. But another way is institutional ownership went down. So we can see GameStop institutional ownership used to be like 99%, but then institutions sold off throughout 2021. So back in here. So every time institutions sold out, especially post November, the stock I hit hard because retail doesn't have that kind of buying capacity. I know retail did buy like 75 million shares in DRSML and probably owns like, 300 million shares overall, but it takes a long time for retail to buy. If an institution just goes out and dumps 10 million shares, that's very hard for retail to go and undo, right? It takes months and months and months. And that's why you see the steady like creep back up, I think. But I think that what we saw was big institutional selling. But to me, a big bullish thing is that institutions are now basically done. Like they've unloaded all their bags. If institutions want to get back in on GameStop, they've got a long way to go. So this is like a contested space at this point, and institutional ownership is at a low.
I see. Let's pivot a little bit more now to the cycles. We see a couple really big tendencies in terms of seasonality. You were walking me through that in your tracker quite a bit. Now, this month tends to be quiet. Next month tends to have some kind of activity. What are your expectations around that? And can you also talk a little bit about how you're counting the cycles, specifically the T35?
Okay. So let's talk about, and I want to say right away, I didn't come up with these cycles. So I don't want to take any credit for them. I'm just trying to explain what other people have discovered. And it seems right on the money because you can go back to, like, as an example, I don't know, I'll just find a cycle. It's pretty distinctive. This one looks pretty good. The volume's not crazy high, but you can see we were in a drought of volume. Here, this is February 6th. It's always at the beginning of a month, and there's a reason for that. You can see that the price blips up here. This is a relative high on price, $25. Decent volume. Everyone will remember these. Like there's key days in the GameStop histories, like in the lore, right? When these happen, price is going bonkers, just like on June 6th, and then crashes right off the top and gets shorted down into oblivion. So what happened here? I believe if you look back, you're probably looking at, yeah, our signals right there. So this is February. So what you want to do is you want to go back to not the previous OPEX, but the one right before it. So we're looking at December's OPEX. And what we're looking for is a signal here. And the signal we're specifically looking for is fails to deliver on XRT. Other ETFs are probably good too, but it has to do specifically not with the GameStop fails, which there's good ones here to see, but it's the fails to deliver on the ETFs. That's what we're looking for. So what's happened here is what I believe happens is this is a monthly options expiry, especially a yearly like this. This is December, right? So lots of activity. There's going to be lots of puts and calls going on here. They don't want to go and get GameStop shares, although it looks like they had to satisfy this, and they failed a bunch of them. What they do is they go to ETFs and fail the ETFs instead. So that's what I described on the picture here. So during a monthly options expiry, a period like this, lots of demand for GameStop. They don't want the price to run up. So they do the juggling act and they go to the ETFs, right? So what do we see? We see volume and fails to deliver on the ETFs go on. Here's a little bit of high volume here on the ETFs. And then they're going to have to reconcile this creation of shares that don't have GameStop in them sometime later. So I don't know why it works this way. I want to say this right away. I understand that it should be 35 calendar days, but it's 34 trading days. So if you just go out 34 trading days, it's usually 33 or 34, like right on the nose, and that's where the cycle happens. In theory, why does this work? Hopefully people follow along with me here. I think that it's because it's not one market participant that's happened here, it's two market participants. What happens is they request the creation of the share of the ETF. Now that ETF authorized participant, that's the person that makes the ETFs, the units, has 35 calendar days. So that's going to take us out to 5 weeks from here, which is going to be, so this would be actual calendar days. And you would go out to about right here. But then there's like 6 trading days that you tack onto it. And then a couple more trading days because of settlement. And you end up here. So this is sort of hard to say on a live stream, but I do understand that the rules should be 35 calendar days, but it doesn't appear to work that way at all. It's always 33 to 34 trading days, and it hits it right on the nose every single time. So let's go to the one that would be the most interesting, the one that Roaring Kitty seemed to anticipate and kicked off everything we've just seen. So what we can see is huge fails to deliver over the last year on XRT and all the other ETFs and GameStop, importantly. So they were suppressing the stock as hard as they possibly could, got it down all the way to 10 bucks. You can see that the fails are going crazy on XRT at this point. They're not even following a pattern. They're just happening all over the place. But where you would expect one of these like reconstitution of ETF cycles to occur is right here on May 3rd, because that's from options expiry in March, 34 trading days later exactly. So we go out 34 trading days. And again, I know it shouldn't work like this, but it seems to. And all of a sudden you see huge volume out of nowhere. And the price goes up like crazy. This is a classic May cycle. What did Roaring Kitty do? He bought calls, as we all know, right in this cycle, millions of dollars worth of calls. And they were so cheap right there, it's crazy. The calls were incredibly cheap to buy. So that caused a gamma induced event, leading all the way up to $80 a week and a half later. All right, so that's like a lot. That's a lot to process. I think anyone new to the story is going to be like, what just happened here? But it's crazy because you can go back years and years and years and you can find these cycles. Like, here's one.
Now, quick note on that, though. What do
Yeah.
you think about the instances where the cycle doesn't happen?
That's a good question. So right here, classic case, big volume, big price improvement. Cycles clearly coming off of this OPEX where we see huge fails to deliver. Perfect case, right? And this is just some random month in 2014. But it won't happen, right? And it should, like in July. July is a really good case. Let's go to a July options expiry where we see big fails to deliver on, well, here's, look at the fails to deliver here on this July options expiry, right? On GameStop. 4.2 million shares failed, but no cycle, or sorry, it would be, I misspoke here. You would need to look at May options expiry to see a July cycle. And we almost never see a July cycle. So like right here, no cycle, right? Why? Why don't they ever happen? So let's go to, let me go to 2021. So we had a cycle basically every single month in 2021, except for July. And why not? So like you can go back, here's 34 trading days or so after, that should be a couple days later. After right here, we have, look at the fails to deliver on XRT, right? This is a pretty classic signal. Here's our May options expiry. Here's big fails on XRT. You should be able to count 33 trading days later and see big volume and price improvement, but you don't. Instead, you see, relatively low volume, especially for 2021, and price is just getting hammered down off its recent like top of 56 here, down into like the 40 range. So why no cycle in July? And so what I did was I put a sheet here together where I looked back and I said,
sorry, quick interruption. There's a question on when does the cycle start? So what is the actual
Yeah, like we should probably look at the most recent one. So look at May 3rd. That's a good question. What you might see sometimes is something like, sorry, scrolling all over the place here. So see how the day before,
somebody has epilepsy.
right? See how the day before on May 2nd, there was actually like a blip up in volume. That could have been because he was buying all these calls, right? But so maybe there's options related activity leading up to it, but it's typically abrupt. Just boom, we're all used to this. Huge volume pours in out of nowhere. And this is not like what we saw with a DRS buy that comes in like every 2 weeks off computer share, or a small little blip and it fails to deliver. This is huge, right? But it's not OPEX. Someone just said in the comments it starts on an OPEX. No, it's off of, I call it a tailwind because it's related to this March OPEX that happened 2 months before, or 34 trading days before. But it's characteristic of being in the first part of the month. OPEX is the third Friday of the month, right? So this is early in the month and is somehow related to the events from the past. So good question. I went back and tracked them all. So our data basically starts with one of these events in 2012, and there was a June cycle on June 7th that year. And you can see that June hits consistently, like basically all the time. So 66% of our Junes, we've seen a cycle happen to one degree or another. Yellow is like a maybe not a full cycle, maybe just like has some volume or has some price improvement, but not both. And same thing with August. But like July almost never happens for some reason, and December almost never happens.
Yeah. And from a data perspective, some of that becomes anomalous to me, like why it would be so seasonal. And
Right.
there's a lot of intricate market forces that can kind of go into the background behind that. But we have about 10 minutes left. One of the next things I think we have to hit quickly, at least, is XRT, and specifically, what do you think about XRT's involvement? You talked about the ETFs a bit already, but there was a couple questions specifically about XRT. So is there anything special there as far as you see it?
Yeah, I think XRT has been a big part of the story since really the beginning. As far as my data goes back here, you can see that during options related settlement on GameStop, XRT was hit up every single time. Like here's an OPEX settlement period. This is July of 12 years ago. The volume on XRT is crazy, and the fails to deliver on XRT correspondingly crazy. So they've been using XRT as a source or a locate for shares for GameStop for decades, right? For a very, very long time. But what's important is, there's other companies in GameStop like Chewy, and just recently Chewy became GameStop's or XRT's #1 holding. And Roaring Kitty just bought some large number of shares of GameStop and filed a 13G, right? So at the same period of time, this is very odd, the GameStop went from one of the biggest holdings of XRT to now only being 1.1% of XRT. And Chewy became the biggest holding of XRT. Now Roaring Kitty's going after Chewy. So what's the relationship there, and what is Roaring Kitty seeing that I'm not seeing? Someone posted something on Superstrong today that's great, which is that of all the stocks in XRT, there's a whole bunch in there, right? There's only 3 that don't have near 100% institutional ownership. So let me pull that up really quick. Should be near the top of Superstrong. Hopefully it's up here. I'm not sure if I'm going to be able to find it right away. I know it's going to be right below where I stopped scrolling, but basically that's always how it goes, right? Yeah. So it's interesting that of all these stocks held in this very, very overshorted ETF, right? Institutions own like 100% of almost all those ones in that basket. And GameStop used to be owned 100%, 99% by institutions because it was so overshorted, right? So that's telling me that all the stocks in XRT are very overshorted. That's the only way that institutions creep up to 100% ownership, right? Because every time they lend their shares, then they buy back those same shares, and they keep increasing their holdings as the share price plummets, right? So this basket of stocks, XRT, is unique because number one, it's been moving between like 400% short and 1,000% short over all the time we've been watching it. All the underlying are probably grossly shorted if they have 100% institutional ownership, except for basically 3 companies: GameStop, Chewy, and this recent company that just got added to it. I'm not sure even know the name. So somehow Roaring Kitty's targeting the 2 companies in it that aren't like institutionally owned 100%, and why is he doing that? So it's just a huge curiosity. But the only times that we've seen XRT volume, like we saw in the recent last 6 weeks, like we saw 30 million. Keep in mind, there's only supposed to be 5 million shares outstanding of XRT, but we're seeing 30 million volume on it right here, right? So something's going on with it. The only time we've seen anything even close to that was during the sneeze. So they immediately went to, where is it? Oh, I'm way off here. They immediately went to XRT right here for 30 million shares back-to-back days. And XRT, you can see on the side here, immediately went on reg show. So for an ETF to go on reg show is a sign that like something's dangerously wrong. And we can see that the sneeze took them to like that danger zone right away. They immediately said, we need to fail it into oblivion, get all these GameStop fails off of our, right hand and into our left hand. That's what everyone noticed right away. There was like 1,000% short interest on XRT, and there was a period of quiet, right? Fails to deliver go away. Volume still pretty big, but stock price was really, really low. They crushed it down. But then what happens? All the fails start popping up again, right? And it's just been a juggling act to me ever since. And occasionally what's interesting is they'll fail other ETFs. So maybe they'll bounce it to XRT for a while, but at some point they'll have to go to another ETF. Like, I'm not sure what this was specifically, but I've got a bunch of other ETFs tracking back here. So it could be VTI, which you're probably familiar with, or VT, or IWB. But at some point they juggle away from GameStop because their fails are getting too bad on GameStop, away from XRT because their fails are getting too bad on XRT, and they go to another ETF. And so you see the signal move to another ETF. But this seems to be the ETF of like favor for them. And I'm not sure why that would be. Maybe State Street just doesn't regulate it as tightly as the other ones, or maybe the lend fee is more reasonable there. But it seems to be the one they always go to the most. They do occasionally go to other sources like they did right here.
Got it. Let's talk about the future. You and I, when we were talking last, you had some kind of specific thoughts about August, and also a shout out to Cryptato, who just donated to the stream. So that's super awesome. Thank you very much for that. But looking out to August, what's happening there?
Yeah, so basically, if we look at what happened recently, we saw on 5/3, this would have been an ETF related settlement event, right? Again, I didn't discover these or anything like this. It would have been off March OPEX, so 3/17 or whatever what it was, leads to this event here. We saw the price run up, but DFV anticipated it, bought calls into it, and basically, rather than the stock price crashing back down to $10 like we would have expected it to, it got caught in gamma and then ran off to $100 or $80 up, something like that, right? So there was a share offering into the tail end of it right here. So a question that you had earlier was, am I concerned about the share offerings? Not really, because if the share offering would have like killed cycles, then 6/6 wouldn't have happened, but it happened anyway, right? So we saw another big ETF related settlement event again. And what this is they have filled up XRT with cash and other ETFs with cash. They desperately need shares of GameStop. They don't want to fail GameStop a whole bunch. So they go to the lit market, they buy shares on that Thursday. And then so it runs up, and then Friday, they want to crush it back down to max pain. Because again, they need to get the shares into the ETF, but they need to get it through the max pain window, right? So the company offers.
Just a quick note on that, because you mentioned that before too, and I just want to clarify a little bit about max pain. I have a video that goes pretty deep into detail on it, but it's important to note that market makers, they actually don't have the leeway to just move price wherever they want to get it to max pain. Market makers are really slaved to order flow. So I do believe that they have an incentive if price is close to max pain to try to drift it there. But if price is like a wide margin away, they can't just move price down. It's just important for people to be aware of how max pain kind of affects the marketplace, because it's a thing to be aware of. if it's close, absolutely on the table. If price, something like this, if it's trading for $15, $20, if it's like 5% away, they can't move price 5%. So just an important note.
I think maybe GameStop people might disagree because we've just seen so many days where these cycles hit on a Thursday. And by Friday, sure enough, here we are right at max pain again, right? But
Yeah,
what's interesting is this cycle.
Just a quick follow on to that though.
Yeah.
One of the things that you have to track is where max pain is. So one of the reasons why you'll see that tendency is because people are trading their option into expiration. They're trying to salvage what value they can out of their slightly out of the money option. So that moves where max pain.
Definitely. And so, I try to, like on the sheet, you'll notice like I put max pain over here. And when I start to see it move a bunch, I'm like, okay, the flow is pretty interesting because the flow is going to move the max pain around a bunch, right? Yeah, that's totally true. So maybe something to mention before we get into the futures, looking again at the past, the cycles rarely end on a Friday because of the nature of the options expiry is going to be on a Friday. And if you go T+6, T+35, T+1 or T2 or whatever, it almost never ends on a Friday again, but it did in this May cycle. So very, very important. This May cycle, for one of the first times in a long time, May 3rd, right here, was Friday. So price ran up all the way up to 17.45. They were only able to get it down $1 by end of day. So that caused, it ended way over max pain for the first time in a long, long time. And you can see what happened. Like the impact of that was just incredible. So we can see why they don't want it to go too far above or below max pain, because apparently in the week or two to follow, it's just going to cause a reckoning. So that's what we saw on May 3rd. Reckoning happened, went up to $80. Company issues. We still get a cycle off of ETFs. I think there's some kind of deferral because of Juneteenth. So Juneteenth is 6/19. And then 4th of July is another holiday. Both of these holidays landed in the middle of the week this year, not on a Monday or a Friday. And I think for some reason, when the holidays land in the middle of the week, it means that they don't have a reconstitution event. So we're not going to see, I don't think, a tailwind on 7/9 like we should. So there should be a cycle here on 7/9. But instead it's going to skip because the holiday basically pushes it to the next one, which is going to be 8/8. So that's my current theory is, was able to predict this one with pretty strong confidence because I had looked at the chart. We'd had 66% of June's hit. July almost never hits, whereas August is pretty consistent.
I love it. And I am at my hard stop, so I have to drop, and that will wrap us up. But first, I got to say thank you so much again for the absolute download of information. For everybody that's here, I'm obviously throwing in Newton's YouTube channel, which essentially all of you already know. So I'm doing that simply because it should be out there. But thank you so much, man, for hanging out, for sharing a bunch of information. If you guys do want to see us do another one of these, let us know. I definitely would love to. I love talking about this stuff, and I love learning from you because it's such a depth of information. So thank you very much, dude.
Yeah, thanks, Eric. Really appreciate it, and love it too, because you have so much knowledge about options that I don't have, and you've lived it and breathed it. And that's really the only way you learn, right? The best way to learn is to do. And since I've never felt comfortable playing options, I just can't speak with confidence to it all. And appreciate you taking the time and having me on your show. And I look forward to the next opportunity.
Yeah, dude, absolutely. All right. Shout out to the chat. Thank you so much, Cryptato, for all the support and everybody else hanging out. We're over 900 viewers for the vast majority of it, which is super cool to see everybody so engaged. It adds a huge dynamic and it's fun for us. So thank you guys for hanging out. Thank you guys for sharing your information and knowledge with us. Be an outlier. We'll see you guys later. And we are